Hi guys, I'm Adrian Manns of TraderInsight.com, and I'm here to talk to you today about some of the opening gap trades that we saw this morning in the first hour trading pit. So, question came up after the first hour trading pit was open. Somebody called me and said, you know, there's a lot of opportunities for these opening gaps every morning, and sometimes it seems like folks are just trying to take them all. Other times it seems like there's a very good job done of narrowing the list of opportunities down to just the good ones. How do you differentiate between the good and the bad? How do you take a big list, say 10, 15 stocks, and turn it into a small list of say one or two? Well, good news is today I'm going to go over it. It really comes from the opening gap scanner that we had developed for Trader Insight. So I've got this here, and let me just go through a couple things with you very quickly and show you how we focus our attention on this thing right here, the opening gap scanner, and how this helps us to determine what's going to make for a good reward to risk ratio, a good potential opportunity versus a trade that we might want to pass up on. So let me just get this full screen for you here and do a little bit of markup. So you can see that in the spread column, right, this is all based on some criteria that I gave to a very gifted programmer who happens to be an alumni. You guys know Goran. But if you look at the spreads, you can see 25, 35 cents. In some cases, you've got a spread down here on CRL that's $11.36. That just helps you to make a first cut first thing in the morning. So you're able to look at this thing and say, you know what? The one that I like the best is right here in this column. It is Teva. So Teva's there on news. Teva is there on a tight spread, and Teva's there on earnings. So why is all of that important? Well, generally speaking, as you know, when earnings come out, the reaction tends to be overblown. This is not like a very negative impact kind of an event that happened in the markets. This is not something bad happening with the CEO. This is just run-of-the-mill earnings news, and that is my favorite and what I've been telling you to focus on all along when you're setting up these trades. So now let's take a look at our real tick charts and see how we went ahead and managed this position. So right behind me here, I suppose you've got a chart of Teva Pharmaceuticals, at least I hope you do. Let me just mark this up and show you exactly what it is that we were looking at first thing in the morning. You can see that that first bar made a gap move to the downside. That's a no-brainer. So we had a big move lower that qualified as a 2SD opening gap. Once that's in place, the rules are pretty simple for the basic gap trade. We just want to go through and focus on whether or not we're getting lower highs, and once we have those lower highs in place, put together a risk-reward ratio that makes sense. If it does, we're going to take the trade. If it doesn't, we pass on the trade. So let's look at how this one marked up after the opening bell. You can see right there is the level that I'm interested in for a violation. If it gets up through there, then I would be interested in a long side trade. Initial profit target on this one right up here at the top of the bar, and my stop loss would be just below the close of the first bar, right about there initially. And then the next thing that I want to do is as soon as we have been trading for a while, I want to ratchet that stop up. And in the case of Teva, it would be just right under the low of the bar that actually created the entry. So if you look, you can see here that there was a very nice entry that presented itself. You can see those balloons on the chart, those little brown dots. Those are the actual entries and exits. Normally I turn those off so that they don't confuse the chart, but here they are. So you can see the entry trigger happened right at this line, and then our fill was within a penny of that line. That's because they set up the slippage very tight. Why is the slippage tight? Because the range on the stock for the morning and the spread on the stock for the morning were also constricted, right? So that 1 penny spread that we saw around the opening bell going to work in our favor. Then it got up and it hit the first profit objective right here at this line. That was the place that in the room I said, all right, let's go and move that stop up just right behind there, and we're going to trail on it. Well, I trailed a little bit too tight, as you can see. Penny spread, right? Sometimes it works in your favor, sometimes it works against you. Missed this move up into this range, but managed to hang on to the profits that I had right around the open, and that's all good, right? So that is what we were looking to focus on with the stock. Now let's take a look at how to set up the order for this so that it can just be bracketed up and not be the front of your attention, right? You can just put the order together, put it out there, and then bar by bar go through and make the changes that you need to make. So in the case of Teva, what we would do is we would click on bracket, and then we would bring up a buy order. And in the buy order here, you can specify your stop, your limit. I don't have a keyboard right now, so we're just going to have to go and mark this up manually. But the stop price is the activation price. That's that first line that I drew, the high of the second bar of trading. Limit price, worst price you're going to be willing to accept. So that is going to be a 1 penny slip in this case. And then down in here in the quantities, you would put 100 for both of those for the exits. And then you would check price instead of offset. And you would put in your profit objective, and your stop loss would go right there in those price boxes. So that is exactly the way that this one played out this morning. As you know, I didn't have any other Baltimore shop trades that I got in front of. I know Rick did. I know some of the other guys did. This was the one that I chose to focus on. I like to keep the attention right on the ones that I think are going to be the most likely to follow through. And a lot of the guys like to have just as many opportunities as they possibly can because it is a numbers game. But that's the way that we played it. If you have any questions, shoot me an email, adrian@traderinsight.com. Hope you had a great trading day today and an even better one on deck for tomorrow. It's the best trader education anywhere, only from traderinsight.com.